Donald Trump just reignited the trade war with 100% tariffs on China, and the markets are getting slammed. Stocks are dropping across the board, but while most investors are panicking, the smart money is getting ready to strike. And one stock that's caught my eye in all this chaos is RKLB. Yeah, while everyone's focused on the big tech names, RKLB might be offering a small discounted window to get in and ride the wave. So as a CPA, I'll walk you through the numbers and my analysis so you don't have to dig through the details yourself. And if you find this video helpful, don't forget to hit that like button and subscribe to the channel. So with that said, let's jump right in. RKLB currently trades just above $64, and it's up over 157% year to date. For background, RKLB is one of the biggest up-and-coming names in the private space industry. They design and launch small and medium rockets that send satellites into orbit, basically helping other companies, governments, and researchers get their tech into space faster and cheaper than ever before. Their current workhorse rocket is called the Neutron, which has already completed dozens of successful missions. But the big story now is their next-gen rocket, Neutron, a partially reusable medium-lift rocket that could put them in direct competition with SpaceX. Now, beyond launches, RKLB also builds satellite components, spacecraft, and even entire space systems, making them a full-service space solutions company. Based on RKLB's most recent Q2 earnings release, the company posted record revenues of $144.5 million, up nearly 36% year over year. They also saw a 6% increase in gross margin compared to last year, signaling strong operational performance. Another key metric is the customer backlog, which sits around $1 billion, providing healthy visibility for future revenue and growth. On the cash flow side, the company is still burning cash, but for strategic reasons. In Q2, they showed negative free cash flow of $55.3 million, an improvement from the prior quarter due in part to incoming payments from their satellite program. However, spending on the Neutron rocket is expected to ramp up as the company works to scale beyond the initial test flight. Now, regarding Neutron's progress, the latest company update shows a timeline with completed items in green, ongoing work in blue, and pending tasks in white. The prevalence of green and blue indicates that the planned launch before the end of 2025 is still on track. Now, for what's in store for Q3 remains quite positive. RKLB's Q3 2025 outlook is considered strong because it demonstrates a combination of growth, efficiency, and financial stability. Projected revenue of $145 to $155 million, up from $144 million in Q2, shows sustained demand for both launches and space systems, supported by secured contracts. In addition, improving gross margins, which come in at around 35 to 37% on a GAAP basis and 39 to 41% on a non-GAAP basis, which indicates that the company is earning more per dollar of revenue, reflecting operational efficiency and progress towards profitability. Now, at the same time, a solid cash position of $754 million provides a runway to invest in R&D, Neutron development, and operational scale without needing immediate external financing. Even with an expected adjusted EBITDA loss of $21 to $23 million, the company is demonstrating disciplined cost management and nearing the gap towards break-even, making the outlook healthy and sustainable for a growing space company. Now, RKLB is currently trading at a price-to-sales ratio of just over 61, which is more than double its historical average of 28.71, signaling a heavy premium, especially for a company that hasn't yet turned a profit. However, the premium also reflects the company's high growth potential as it continues to reinvest into the business and deliver increasing revenues as we've seen earlier. Now, one factor that indicates some risk is the analyst consensus. The average price target sits around $52 per share, while the current stock trades near $64, implying about a 23% downside from current levels. Despite this, most analysts are still leaning towards a buy rating rather than a hold, and in my view, the most important consideration is your long-term strategy. With a market cap of only $31 billion and the space sector continuing to grow, the stock has the potential to nearly double or triple over the coming years. If you plan to hold for the long term, short-term price targets and analyst estimates are less relevant, since they're typically tailored to the near-term performance than the future growth. Now, if you enjoyed the video, drop a thumbs up and subscribe to the channel. Let me know your thoughts on RKLB in the comments below, and as always, thanks for watching. I'll see you in the next one.